Let's complete the loop on what the global environment holds for us. Rana Gupta is Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, great to have you with us here. Good morning. Prashant this side. Season's greetings to you. Happy New Year. Just want to start with that bond index inclusion news. In some ways, it's inevitable. JP Morgan announced it finally in September last year. And now Bloomberg is saying that they will do the same. It's got very positive implications over a long period of time. First, of course, is cost of capital and a structural basis reduces here. What's your sense, just kind of sort of your first thoughts on what this means for the market here?
Good morning, Prashant, and a very happy New Year to you and all your co-anchors and all your viewers. You're right. This Bloomberg Bond Index inclusion was expected after the JP Morgan thing happened. And we could see inflows which could support the currency, which would potentially even bring down the cost of the capital. But I think, the investors do not just buy because it's part of the index. I mean, of course, passive funds do, but for the big money to come in, the investors need to take a view on the inflation. Now, I think one of the most, credible things that has happened, and we have spoken about the fiscal consolidation, the current account deficit correction, for some time. But I think the structural decline in inflation towards this, more like 4 to 5% range is also a very good thing. Because if you go back in the past, like 5, 7, 10 years, Indian inflation easily was 7-10%. From there to decline to a 4 to 5% due to fiscal consolidation, due to supply side improvement, due to current account deficit reduction, and inflation staying in that range, overall sets a very good background, I think, for the bond investors to put in money.
Okay, all right. So that's the JP Morgan inclusion including India in the bond index earlier, and now the possibility of India being included in the Bloomberg bond index. That is the big trigger. I also wanted your thoughts on how to approach equities now, because, a lot of things are working in our favor. FIs have come back in a big way. Crude has fallen quite a bit. You've seen this domestic fraternity, the mutual fund community, pick up in a huge way. The cult is growing. So do you think that 2024 could see some more build-up in the equity markets here in India? And what is your pecking order looking like now?
So I think if you look at the valuation part of it, the valuation, I think, for India is now a bit on the higher side, because right now I think Indian market is trading at about 18 times FY26. That's towards the higher side. But I think the liquidity portion is strong. What we would say is that in the last year, if you look at the last calendar year, almost any sector, if you go the sector right, for example, real estate, all the stocks went up. If you got capital goods sector right, all the stocks went up. Most of the stocks went up. This time round, I think one has to be more bottom up and should not bet on a sector pulling through all the stocks. So this time round, one has to be much more bottom up than last year.
All right. Hi, Rana. Good morning and good to see you on the show. I recall the last time we spoke, you were hinting that maybe in the near term, China could see a bit of a rebound. That's not really happened, right, in terms of either the stock markets or even the economic data. So I think India is appearing like the market that will stand out. Do you believe that the flows continue to India, or do you see we could see in the near term some deviation to China?
See, I think last time what we mentioned is that China, as long as they do not address the export and real estate, which has been supporting this economy for a long time, as long as they do not kind of address that, this market, I think, will remain range bound. Also, I think another option could be China addresses the consumption in a very big way, which through real estate also partly, which we have not seen. All the measures that have been taken has been more like incremental. So therefore, I think we have not seen much move from the markets. I think it is a prerequisite for Chinese markets to do well to address either the export or the consumption or the real estate issue, which so far we haven't seen. And obviously, I think because China not doing well, the other markets, including India, because of all the things that is happening in India, has been a big beneficiary. But I think I'll just have to highlight, if you take a look at the emerging market ex China, I think India was up something like a 20% last year. But I would also highlight that Taiwan, South Korea, did quite well. So did the Latin countries, right? So they are also doing well. In fact, some countries in ASEAN lagged last year. So they could even see a rebound. So I think that China underperforming and money coming to India will continue to happen. But given India's performance, we could see some competition from other markets, and that could be ASEAN or even LATAM, not necessarily China.
All right, Rana, we'll leave it at that. Thank you for joining in and giving us all those updates about the market. Let's